Hello guys, welcome to Unisys weekly fundamental analysis. So first of all, as usual, we'll look into the dollar. So on Friday, the US dollar index continued its sharp decline overnight. The previously announced US labor market data was disappointing, but the 10-year US Treasury yield strengthened again, approaching the new high of 1.331 cent this week since last February continue to pressure the gold prices. So the market is generally optimistic about the rapid recovery of the US from the COVID-19 epidemic. More CEOs plan to give employees substantial salary increases. The White House has used extraordinary measures to increase vaccine production capacity, and Treasury Secretary Yellen is planning to increase taxes on the realization of the anti epidemic relief plan. Next, the American CEO's confidence in the economic outlook surged. So let's see. A survey released by the Advisory Council on Thursday showed that with the COVID-19 vaccination, US business leaders' confidence in the economic outlook is the strongest since 2004. They expect fewer layoffs and more executives in the next few months plan to give employees a substantial salary increase. Okay. So furthermore, Biden's will visit Pfizer factory. As state and local governments across the country require more vaccines, U.S. President Biden will travel to Kalamazoo, Michigan on Friday to visit Pfizer's manufacturing plant. The plant is Pfizer's largest production base and the only COVID-19 vaccine production line in the US. And the US Treasury Secretary Yellen said on Thursday that at least part of the cost of large-scale infrastructure, climate, and education investment plans need to be covered by tax increases. President Biden also intends to launch the aforementioned plan later this year. In an interview with CNBC, said that the details of the infrastructure and clean energy plan are still being worked out, which will be part of the US 1.9 trillion COVID-19 rescue plan. The plan is currently under consideration in Congress. Besides, Biden said in an interview earlier this week that everyone who wants to be vaccinated should be able to get a vaccine by July. But he also said that it will take several months for the US to recover from the plague that has killed nearly 500,000. Alright, next we're looking to the Aussie dollar. The Australian dollar rose to the highest level in the past 3 years against the US dollar, and the optimistic expectation of global economy recovery supports the Australian dollar. The Australian dollar maintained a strong upward trend against the US dollar, with the exchange rate hitting 0.7846, the highest level in the past 3 years. With the acceleration of vaccination in various countries, the optimistic expectation of global economic recovery continues to support the Australian dollar. So early in the day, data released by the Australian Bureau of Statistics show that retail sales increased by 0.6% per month in January, which did not meet the market's expected growth of 2%. However, the report was largely ignored by market participants. In addition, the Eurozone announced a series of manufacturing data that performed significantly better than expected, which also boosted market risk appetite, put pressure on the dollar, and also drove the Australian dollar higher. And furthermore, we're looking to the gold. So spot gold bottomed out and rose slightly by 0.48% to 1784.25 per ounce. It once hit a 7-month low of 1760.81, but then recovered due to the decline in the US dollar. However, gold has fallen by more than 6% so far in 2021. So far this week, the price of gold has fallen by 2.19%, the largest weekly decline since the week of 8th of January. The continued increase in US Treasury yields has put pressure on gold prices, and a gradual relief of the epidemic has also further pressured gold prices to fall. However, the Federal Reserve report and Euro Fed Chairman Williams reiterated to provide strong support to the US economy to support gold prices. In addition, the mixed economic data also gave gold prices a respite. And furthermore, the House of Representatives plans to vote on President Biden's stimulus plan on 26th of February. The Democrats tried to pass the bill in less than 4 weeks. Senate Majority Leader Schumer said he expects the White House to sign the economic stimulus bill before 14 March, when the federal unemployment benefits for millions of Americans will expire. So, due to rising interest rates on global public debt, gold is at disadvantage. Analysts say that the market expects that the economy will improve in the next few months and the COVID-19 vaccination work will be carried out, which has weakened investors' enthusiasm for gold, and rising yields have also reduced demand for non-productive gold. Alright, so following up is the forex calendar for next week. So as usual, friends who would like to trade during the news, so please set up your stop loss, as whenever there's news, the market will fluctuate very high. So that's all for today. Thanks for watching.